What is going on, y'all? This is Paid Me in Dividends, and it is January 2nd, 2025. First of all, Happy New Year's, everyone. Hope everybody had a good holiday, Christmas, and New Year's. And it is 2025 now, so we're going to start a new journey to this channel. Hopefully, I'm going to ramp up the content, put out more videos this year. I really just started posting to this channel about 2 months ago, back in October. The channel was created in 2022, but there was no activity. So really, I started posting heavily the past 2 months, and my plan going into 2025 is to post more content, more video, and just put out more content onto my channel. So I appreciate you guys sticking around. Again, today is January 2nd, 2025. Before we get into the video, let's just go over my portfolio very quickly. As you'll notice from the prior video, my portfolio has dropped a bit, right? Now I'm at $81,778. That's because the market is down right now, right? So let's go down here and look at my holdings. My holdings have not changed. I still have 1,000 shares of AIPI, 1,000 shares of MSTY, 100 shares of RDT, and 100 shares of NVDY. Now let's take a look at Bitcoin very quickly, right? So top of the year 2025, Bitcoin is at 96,000, right? $96,000. If we look at SPY, which is an indication of the S&P 500, it is down about 1% over the past 5 days. Looks like we're down about 2% over the last month, but the market is still up 6% over the last 6 months. Now, I want to talk about high yield funds in this video, right? As we always do, but I want to specifically talk about our high yield dividend funds outperforming the S&P 500. So here I made a very short list of a few funds that are very popular and familiar in the high yield dividend space. And what we're going to do in this video is I'm going to compare it to the SPY ETF to see how they have performed against the SPY. Now, granted, a lot of these funds haven't been out very long. Some have been out longer than others, but we're going to see since their inception, how have they performed against SPY. And why am I using SPY? I'm using SPY because it is the S&P 500. The S&P 500 is a stock market index that is viewed as a measure of how well the stock market is performing overall. It includes around 500 of the largest U.S. companies. So taking the S&P 500 and using it as a measurement, a form of measurement, is really good because you can pretty much compare how these funds are performing versus the overall market. It's a great measurement stick to use, and so we're going to use the SPY ETF. You can also use something like VOO. You can also use something like QQQ, which is the NASDAQ, but we're going to go with the SPY. We're just going to go with the S&P 500 index, and we're going to compare some of these funds. So the first one we'll start with is, let's start off with YMAX, and let's see how YMAX has performed versus the market. So here we can see YMAX is in blue, right? So this is an example of $10,000 invested with dividends reinvested. So we can see YMAX has performed almost identical to the S&P 500. Now, keep in mind, YMAX just came out last year, January of last year, it looks like. So we only have about a year or less of data for YMAX. But look, you got to take this into consideration, right? So with dividend total return, meaning with dividends included, YMAX has kept up with the S&P 500. Now, obviously, the share price have decreased, right? It started off at $19, and it's now trading around $16, whereas SPY's, share price has increased. However, what made up for this was the large distribution, right? And YMAX started off paying monthly, now they pay weekly. And so again, this is something you got to understand about these funds. Is you're not necessarily investing into them for capital appreciation, but you're investing into these funds for income. So you can expect some of these share prices to go down and dwindle down a little bit over time. I'm still a bit wary about some of these funds, and I would still try to pick funds that have a good underlying asset. This is the reason why I choose to invest in these, right? Because AIPI holds a basket of AI and tech stocks, and so the share price typically hovers around that $50 range. MSTY, of course, is from MicroStrategy, which has that big Bitcoin correlation. And so the inception price was $20. Now it's $26. So it's actually up from inception. Same thing with NVDY. The underlying is NVIDIA. And so you still want to be very strategic when you pick these funds and ensure that the underlying asset is actually something that's going to be around long term. But again, we're just going down a list of these popular funds in the space, and you guys can judge for yourself and kind of see what's going on here. But I think it's pretty fun to look at this, because you get to just see how these funds keep up with the market, and see if it's actually a good investment or if it's not a good investment. Now check this out, right? Look at this. YMAG from YMAX is actually, if you see the chart, there's actually a bigger difference here than YMAX, right? So YMAX, it looks like they've kind of retained their share price around $19. There's not much of a drop here. And total return, we have 35% compared to SPY's 20%. So looking at this right here, it looks like YMAX was a better investment than SPY. Now again, we're not talking about share price, we're talking about total return, right? We're talking about total return, which includes dividends. SPY ETF doesn't pay dividends. If they do, it's probably less than 1%, whereas YMAG consistently pays over 20, 30, 40, 50%, depending on that week or month of option premium that they're able to extract. So YMAG actually looks very, very good compared to SPY. So we'll move on to the next one. We'll look at NVDY and MSTY. Wow. Okay, so NVIDIA has really outperformed the market, right? They started off around $19 share price. They're now trading at $23 share price, and they've consistently paid over 50% dividend yield. I believe there were a few months there where they paid 100% dividend yield. So we can see that total return since inception of May 2023, they have returned 205% compared to the S&P's 45%, which is still a very good return. 45% is an awesome return, but NVIDIA returned 205% and simultaneously paid those monthly dividends. So this right here is crazy, right? NVIDIA outperformed SPY by a lot. So we'll move on to MSTY next. And if NVIDIA did that, I know MSTY definitely outperformed 207% since February of 2024 compared to SPY's 16% in that same time frame. So again, guys, you can see that these high yield dividend funds, depending on the ones you choose, can actually outperform the market while you generate passive income. Now, all of these aren't going to perform like this, but there are some that will perform better than the market. So next, we'll look at the Roundhill funds. We'll just do QDTE and XDTE. because they have the most history behind them compared to RDTE. So QDTE, it looks like is about even since March of 2024 compared to the S&P 500, around 15 to 16% for QDTE. Next, we will look at XDTE. And XDTE looks like it's about the same as well, 16% compared to 15% for the S&P 500. So those have performed very similar to the market. Again, the only difference being that you're actually getting paid a dividend with these funds compared to SPY. So that is interesting. Now let's look at FEPI and AIPI from REX. Let's see how they have performed. Okay, well, we have our first fund that has underperformed the market significantly, right? FEPI has returned 26% since October of 2023, and SPY has returned 36%. Now, although FEPI is down about $2 in share price and has underperformed the market, I will say I like FEPI. They've paid a very, very consistent dividend. Their share price has always kind of hovered around the $50 mark. And so I think FEPI is still a good investment for income investors, right? Because you're still getting that 25% dividend paid out every single month, and the share price doesn't fluctuate much. So I still think FEPI is a good ETF in your income portfolio. But again, as we can see, compared to the market, compared to the S&P 500, it's actually underperformed. So that's just something to keep in mind when you are looking at these funds. You can use this as a measurement, right? Just to kind of give yourself a gauge of where these funds are performing compared to the overall market. So we're also going to look at AIPI, which is a much newer fund from REX and one that I'm heavily invested in. And as we can see, AIPI has outperformed the S&P as of June 2024. So again, we really only have about 6 months of data for AIPI, but within the past 6 months, it has outperformed the overall market by about 4%, right? SPY is at 11% and AIPI is at 15%. And what I like about AIPI, very similar to FEPI, is it really hovers around that $50 share price. There's not much of a variance. It may drop to 46, it may shoot up to 52, but generally speaking, it stays around that $50 price range. And this one actually pays a 34% dividend yield that is paid every month. And since inception, those dividends have been very, very, very consistent. You pretty much know what you're going to get with AIPI and FEPI as far as the distribution amount on a monthly basis. So I do think AIPI and FEPI are still very, very good investments. I chose to go with AIPI, obviously, because the dividend yield is higher, and because I also like their underlying AIPI, which is an ETF that I went over in previous videos, but they hold a lot of AI companies, Palantir, different companies like that. And so they're pretty well diversified as far as dividend ETFs go. And so, yeah, that is REX shares. And we will check out SPY-T from Defiance, which I believe is another good dividend ETF as well, right? So from the looks of it, it's actually underperformed the market since March of 2024. It has returned about 11%, whereas SPY has returned about 15%. But here's the thing, right? There's not much change in this share price. SPY-T usually stays around $19 to $20, and they pay a consistent 20% dividend yield every single month. The distribution amount is typically around the same, I believe around 32 to 34 cents a share that is paid every single month. And so SPY-T is actually a good investment for income investors. Again, it has underperformed the market by about 4% since inception, but it has remained very, very stable as far as share price, and it has paid a very predictable dividend amount every single month. So I do think SPY-T still has a place in someone's portfolio who is looking to generate consistent and predictable income. So we will move on to the last two from JP Morgan, which is JEPI and JEPQ. Now these have a bit more history to them. I believe JEPI has more history than JEPQ. And so we go back May of 2020, right? Now when we look at this, there is a big disparity here, right? JEPI has returned 70%, whereas SPY has returned 113%. So as we can see, there's about a 40+% difference here, right? That is JEPI. Let's take a look at JEPQ. So JEPQ since May of 2022 has returned about 45%, whereas SPY has returned about 42%. So it has slightly outperformed the total market while paying a monthly dividend. So JEPQ looks like a pretty solid investment. I believe they pay around a 10% dividend yield, and it is paid out every single month. So I'm going to wrap the video up, guys. I just wanted to go over a few of these funds and just give you guys an idea of how these popular high yield dividend funds are performing against the actual total market, just so you can have a gauge as to how these are actually performing and you don't get lost in the sauce putting your money into something that's underperforming the market, right? Again, like we spoke about in other videos, it's about being aware of what the underlying asset is and understanding what you're putting your money into so that you can have peace of mind and so that you can invest with confidence. I like high yields as much as everyone else, but I also want to make sure my money is in something that has longevity, right? This is why I put my money in AIPI. They have a basket of stocks, of AI and tech stocks that they write covered calls on. And so you are well diversified when you invest in this. With MSTY, you are invested a proxy of MicroStrategy, which has a big correlation to Bitcoin, which I believe Bitcoin will continue to prosper over the long term. With RDTE, you're looking at more small cap funds, right? So there's a bit more volatility, which means that they're able to extract more option premium on a weekly and monthly basis. And then with NVDY, obviously the underlying asset is NVIDIA, which is a tech powerhouse. We've already looked at the profit margins in other videos, but they make so much money. I don't even think they know what to do with it at this point. They just make so much money, and their profit margins are so large that they are virtually bulletproof in the tech industry. And so that's why I feel comfortable putting my money into an asset like this. So again, guys, that's it for today's video. Again, happy New Year's. As always, I appreciate you guys. We're at 594 subscribers. I believe the last video I put out, I was around 528 subscribers. So I appreciate all the new people who have tuned in. I appreciate everyone who has already been here since the beginning. And as always, I appreciate you guys. Let me know in the comments, what do you think about this video? What do you think about these funds that either outperform or underperform the market. Also, let me know what you're invested in. Let me know your goals now that we're in 2025. What are your goals? Is your goal to make $1,000 a month in dividends, $5,000 a month in dividends, $500 a month in dividends? What are your goals? Let me know in the comments, guys. As always, I appreciate you guys tuning in, and I will catch y'all in the next video.